Good morning. All righty. So the W is working. The end of last week looked like maybe lower, but the idea of this new low failure, potential new low failure. We make some opinions, biases about what's possible, then we see if patterns actually follow through. This one looks pretty darn good. It stalled at resistance, which is obviously very clear on the 60-minute chart. It's already moved up here overnight. The move started yesterday. And the 20 MA is right there where it's bumping its head. And this is a great example of looking to the left with a moving average. So even though we like to use moving averages at Master Trader, the simple kind, we do recognize that they're subjective. So we are not, promoting, use in any way, shape, or form the indicator-based methodology. Actually, tell everybody to get those things off the chart. But we use moving averages as a visual aid, as we like to say. Speeds up the analysis, looking at trends in multiple time frames. Like that's the daily, obviously, 20 MA. Is it above or below? The 50 MA is equal to the 10 on the weekly, and the 200 is equal to about 10 on the monthly. So we can see daily, weekly, monthly, what's going on. Are they in agreement? Are they in opposition of each other? Is it a giant mess? And we can obviously see that looking at the multiple time frames. We're just looking at the moving averages and saying, well, is one above the other? Are they crisscrossing? So on and so forth. We get a pretty quick view as to what's going on there. So now, this is where I like to say the heavy lifting begins to start the day. What's to the left there is that congestion there. So this is not the place to be jumping on board. However, what we'd like to see is some sideways move, maybe a dip, and then a continuation higher. And so notice on the 60-minute chart is that the idea of an igniting bar, and then a nice fluid movement where the bars are about the same in length and topping tails ignored and red bars ignored. All of that confirming this upward move. And now we get a range expansion bar. Not as big as that one, but it's a range expansion bar in comparison to what preceded it after that one. And that tells us that momentum is likely to stall. And when we see that bar, the next thought, right? It's what we teach as a thought process is, trader, you see that bar? You see it looks different than the other ones? Look to the left. Something's likely going on here. And why do trends stall at resistance? I don't know. That's where the majorities are willing to, jump on board at the worst place. It's just something that has happened I've seen forever. Do we like 20 and 50 converging? Well, they're not touching yet, McGraw, but yes, they're converging, meaning what's happening is, so, the 20 came down as prices dropped rapidly, right? It has to do it. It's a simple moving average, So converging moving averages after being over here, they started the move. Let's spread this out a little bit. All right, so they're converging here. 20 is above the 50. And pointing flat to up. And here it gets tighter because it goes sideways. So the moving averages come together. More prices in the same area brings them together. So now the 20 is pointing down and the 50 is pointing up. And what that tells us is, if we were without looking at the weekly chart, but what it tells us is that the weekly is up and the daily is down. So the two time frames are beginning to battle it out as to who's going to win here. Theoretically, it's the weekly that's supposed to win, that it's the higher time frame. But, we've got minor resistance. We got the 20. We got, and this is subjective, but, we got this directly to the left over here. So what's likely to happen is we're going to see some more, maybe some back and fill, which makes sense here. And then maybe it goes up to the top of the range, which will be interesting. Other markets don't look exactly the same, but we're going to get to that. So one of the scenarios that I wrote about over the weekend was, hey, here's this pattern. Initially, it looks like it could go down and get a measured move, but if we get the W, right, it should go up to this area and maybe go all the way back up where we're in a trading range then. But if this tomorrow, right, we got the Fed thing coming and who knows, what might be said. If this reverses down, then we're going to be into the lower high, lower low. So I am not so anxious to get all out bullish here. Mildly bullish. That's what, I was looking at over the weekend. And I said mildly bullish with 1 foot in the exit door. So we'll see what happens here, whether this actually rolls over or, hey, bullish. This is what trading is. We look at what is in multiple time frames, we assess it, and just like moving averages here tell us that, hey, things are coming together. They're not in alignment with each other, weekly, daily. So I'm not so sure what that's going to do. And I said this week might be kind of tricky. That was my comments in the advisory letter. So, and I think it's going to be tricky. So we'll see what the reaction is here. Now, 60-minute chart ahead of itself. Well, that's one way of saying it, Tony, ahead of itself. Not long immediately, because it's already made a run from the bottom of the range to the top of the range. So, those of us that have some common sense and recognize trading ranges and the fact that it's not going sideways at the top of the range, it ran to the top of the range, says don't jump on board here. If you do, you're an idiot. Or you better have a giant stop. So we've got the Russell here up at a 20. The S&Ps are not. It's not up near the highs. So what that tells us simply is that the S&Ps are showing a little relative weakness compared to the Russell. Pretty simple. It doesn't mean this can't go up. It just means that this has a little fuel in the tank to get to the destination. So what we might see here earlier going is that the S&Ps bring up the rear to get to the destination, and the Russell starts to back off. The Russell breaking above those highs is more likely to be a sucker play. So a little bit of room to get up to that resistance area. And this was kind of what we were looking at there. Well, here. There was a lot of 60-minute buy setups. We covered that yesterday in the green room. Where there was that nice move up, and then there was the pullbacks and sloppy 60-minute buy setups that were in a lot of stocks, and they're following through here this morning. So some room to resistance. When it hits there will be sellers there. See what the reaction is. NASDAQ got a little bit more room. So think about it. The Russell is at resistance. S&Ps are almost at resistance. And the NQs have a whole lot more room to get there. The NQs are underperforming. So this is the rotation that's been happening of the technology sector being sold, and some of the losers, the laggards, the ones playing catch up, are doing some of that. And so this could play catch up. So when we look at certain setups such as this, and we say, well, there's room, or there's some, fuel in the tank. This is a situation in which it says to me, if you're going to do something here, go with the laggard, because it's got room to resistance. And it should try to begin to outperform, at least in the moment. Now, looking at this weekly chart, and obviously the one that looks a little bit more bearish, it's still in an uptrend. But this is part of what I wrote about, and I just mentioned before, the possibility of, getting the lower high to drop, because this weekly chart is what typically happens. with this type of a pattern where you've had this run and you've got this reversal and it starts to make a turn, right? You get this green bar starting to make a turn. It's like, it's going to go up. Now, again, I don't know what's going to happen, right? It's, again, I kind of wrote a lot in the letters to say, hey, I'm going pretty far out here with the crystal ball, but it was that kind of setup where it had all these different things, these possibilities versus, hey, everything's in an uptrend, buy the pullbacks, buy the breakouts. Whereas now we've got these opposing messages between time frames. So one of the things that, I spoke about and why I spoke about it was that lower high possibly happening and back down was because of this weekly chart having this run. And now after a run like that, when you start to get the green bar, at some point it typically fails rather than going up to the high, and you get this, which turns out most of the time to be a great buy setup, this lower high, lower low into an area of price support. So again, we're in that one of these situations where we need more information. And so short-term trades, swings maybe for a day or two, when intraday trades make sense. Going out further than that with a bias, we can't, because we just don't have the alignment. So, if you were to assume, right, we all assume some things when we're trading, right? We look at patterns and say, hey, you know what? I think that this is going to be the low, right? This drop here, about 10% from the high to the low, and it's into major support, and I've got this pattern. I think it's going back up to the high and new high, so on and so forth. Okay. As long as you use proper money management and be open-minded, using bar by bar analysis and so on, that's all well and good, right? I'm not so sure, but it's certainly one of the possibilities. All righty. YM up 229 points here, up into the top of the range. The other underperformer, performing wide range bar, so on and so forth. Nice little pattern here, bottoming at the top part of the wide range bar and up into resistance. So likely to stall here. Similar weekly time frame right there. I just spoke about. The Russell we already looked at. Up near resistance. Bonds down, of course. Equities are up, but just slopping around, going nowhere. And crude oil. Looked at this yesterday. Nothing's changed. Just slopping back and forth. Maybe it's got to come down here. Probably so. This type of a pattern, I tend to stay away from, because it could go higher, sometimes substantially higher. But what I would like to see is, if it pokes above these highs, get a topping tail back down. Then I've got a good continuation pattern to go lower. So for now, stay away. Gold is starting to improve. It's in a trading range. So upside limited, probably okay for, intraday trading, short-term trades. You can see the weekly's just chopping sideways there, as this is. Silver pretty tight, but looks like it's trying to turn higher. It's got plenty of room intraday, but sometimes they don't get to the top of the range. So, and it's stalling. Its momentum is stalling a little bit here. And as you can see, good momentum was okay. And now the highs are real close together. So the upward momentum is stalling. So be a little cautious here at the open. And transports, we always look at. Still holding up, but not moving. Maybe we'll see what happens today. And Mr. Blue Chips asking me about the internals. Right, they gave us a mild buy signal last week, the end of the week. One of the reasons why I said maybe W. This came into the upper band here. So not deep, so I said a mild buy setup, because the sentiment didn't come down low. Breath got down here. We had pretty good breath yesterday, poking up close to 2,000. So that was pretty good. yesterday. And so there you have it. We'll see how it unfolds today, as we always do. All yours, Dan.
Good morning. Yeah, we're pretty fully long. We have one or two shorts that are just hanging in there, relative weakness, but we're doing well in this strength. Hey, you know what, McGraw? Oh, you're saying up volume? I saw your email to Greg when you said Q's volume up 58%, and all I did was look at the volume bar here on the daily, and I had no idea what you were talking about. It surely doesn't look up 58% to me. But anyway, we got, yeah, bullish.
He's just saying when you can measure up volume and down volume. So if you compare just the up volume to yesterday or whatever, a certain amount of days up volume, you can split it. Yeah, up versus down.
Right. Yeah, it's kind of like a
advancers versus decliners.
Well, what's that? No, it's like on balance volume. Remember that?
No, that's completely different. It's a more somewhat complicated formula to look at it. This is very simple. Just saying, hey,
right.
Up volume yesterday versus the day before yesterday, and down volume.
Right. Up volume just means it's green on the day, right? Above the prior day's close.
Yes, for that, but those number of stocks that it's measuring.
Right. All right, let's continue here. But yeah, 30-minute high, whatever, or pullback. I still have a bullish bias. I said in the video last night that IWM and diamonds were deeper into the Thursday's WRB. But yeah, we'll just wait and see at the open. All our opens are fine. This AEM, Debbie, I got to give you credit for this. We just nailed the entry, this intraday entry, and I'm gonna put this in our MT live tomorrow on failed patterns, because this failed pattern was our home run intraday entry, and you flagged it for me, and I said, yes, ma'am, let's join you. William, lift. Yeah, lift. I had it as a put spread. We didn't get filled, and we were contemplating putting that in as a swing, and I didn't do it. But yeah, it looks higher, William. Like JD, there's $78. Yeah, you know, there's so many stocks that they've made the turn here, and that has a price void. So I'll put it on the list, sure. JD, Lyft, Starbucks. Yeah, Starbucks, I saw this. It's kind of like a bull flag, a sloppy bull flag. So it's not bad. It's a bullish weekly. It's consolidating the upper part of this WRB. Look at the beautiful 1, 2, 3 after the gap. I think that was on earnings. And finally, you have Baba. Yeah, I like that one, because look, you have 1, 2, 3, you got 5 bars that are making the turn. I like that one the best, William. That looks fantastic. Let me put that here. Yeah, that's a beautiful gap setup. Let's see. Let me put it on the other computer. Tehran, you know the answer. You've been with us long enough. Do I need to have Debbie tell you the answer? You know what it is. If anything is a directional, then of course it's a credit spread. Of course, go through the checklist. Thank you, Debbie. So if it's a liquid and good juice, then absolutely it's a candidate. Anytime it's a directional, it's a candidate. All right, let's go through this. CWK gapping over this. I get this one's also a nice little put spread candidate. And I look at the turn. Remember we did an MT live many months ago about the turns happen in different flavors. Well, this was a nasty breakdown. But then here we have a 180 reversal on support. Then we have a bottoming tail. Then we have a wide range breakout. That was a beautiful turn. Now it consolidated for 3 days and it's gapping out again. That's beautifulness. Yeah, I think I remember, Debbie. You might have done it on this bar. I think I do remember, and then it gapped against you. I remember that. All right, let's see. JR is asking about a couple here. GM, Nicola. GM, it's a mess. I mean, it could be a put spread under support, broke out, pull back to support, but you got no price void on the daily. We just have so many other more compelling setups that no, we have the luxury of being picky. No, you didn't say that. You said Nicola. Nicola had a bullish engulfing yesterday, although that was an upside shakeout, slicing through support. And now it's gapping down to 33 bucks. That's a bearish gap. I just eyeball it. So it's gapping to the midpoint here. So that's bearish. So that one's an absolutely not. Again, there's no pattern. It's both time frames are a mess, and we have beautiful other setups to look at. Colette, I forgot to look at your list that you sent me. Last night I told you I would this morning, and I didn't do it. So this is another bullish retest on LAC, gapping up though. That would have been a great 1, 2, 3 wide range bar to resistance. I don't know, the gap up's kind of eating into my profit. Dunking, wide range igniting to all-time highs yesterday. Look at this bets, which is the ETF. People are betting. You know, the casinos have been strong, dunking strong. You know, I just was talking about the turn, TURN. Look at this beautiful turn. Red bar ignored, 180 reversal. This is your turn. That was a beautiful entry right there. We might have to do another MT live on the old turn. Let me continue here. Enox. D Garner's asking about Zillow. This was a recent IPO. We had a bear 180, a gap down, rallied back. I got no interest in Knox right now. Zillow. It's in an uptrend. It made the turn. It broke out intraday. It could go. It's fine daily, weekly, monthly, but just on the daily, I think we can find more compelling ones. Hey, remember Tesla was our favorite day trade setup yesterday? Beautiful 15-minute. Some folks in the green room bought 15-minute high. You know, they scalped late day breakout, and now whoever held it, you're getting paid for your overnight risk. I personally would be looking to sell into this nice gap. Look at that, it's run $100 in 6 trading days. Yeah, Jake, I remember yesterday, you mentioned that it looked good. PPD, I think had earnings, 34 bucks. That's bullish, and we'll come back to that. ASPU earnings, but you're a mess. I vote for a turn. All right, Bill. Yeah, knees on my list. McGraw, your drop down. Yeah, knee gapped up to 294. Yeah, I have it right here. It's on the list. Todd LVS. It's churning. It's not a great pattern, but and it's at the declining 200. But I mean, the pattern would be called a breakout with the red bar ignored. I just don't like that cycle. I know it's not really referencing a lot of support, but it could be psychological. Some of our traders were trading Caesars. Look better. A pin. That's been on a tear here since the August breakout. Wow. Yeah, McGraw, yeah, typically knee is very spready. I remember him. So don't even look in the first 5-10 minutes. Pool was on our list yesterday. I wanted to buy it today over yesterday's high. The CWH is coming in hard, so we're going to hold off. Baba will still be a great one, maybe 15-minute high. That still looks very good. Zoom, remember we were talking about this yesterday?